Welcome in, folks. We got a three-piece here today. 3 videos up for me to react to. First one up here from 8 hours ago, Tom Lee, everybody's favorite bull. We're going to hear what stocks Tom Lee likes at this stage of the game, okay? Then we got to get into NVIDIA, obviously. Great day for NVIDIA stock. Great day for Elf on a Shelf stock as well. So going to get into NVIDIA here and kind of share some opinions and perspectives, react to that one. And then I want to react to this one from last night, 18 hours ago. Dan Ives talking about the party's just getting started in AI. We know he's very bullish on not only NVIDIA, but also Palantir and a couple other stocks. So want to hear his opinion, kind of react to that and share my opinions and perspectives in this one here today. Appreciate y'all joining me as always. Less than 3 seconds, all it takes. Make sure you hit that like button, please. And also make sure you're subscribed here to the channel. That's all I ask from you guys in return. And I also got a brand new workshop for you guys. I created this about a week or two ago. It's a pinned comment down there. It's absolutely free to access that if you're looking to access it. 7 steps to 7 figures plus in stocks. About a 32-minute video that goes in depth on those subjects and gives you a little growth hacks on how to hopefully scale your portfolio faster over the coming years. Let's get into this.
Going higher and have room perhaps even to be higher than the consensus right now. Presumably the overall economy is going to be holding up well as well. Where does that leave you with regard to the interplay of inflation, Fed policy, interest rates, and the economy?
Yeah, it's a very tricky alchemy because I think that it's very easy for someone to say, oh, well, inflation, if it's up, it's good for earnings. So if it goes down, it's bad for earnings. Right. And a lot of people got tripped up on that because reality is a lot of companies have inverse correlation to inflation. A great example is technology is inversely correlated to inflation. So their margins actually go up if inflation is falling. And with regard to the Fed, again, you know, the Fed it's tricky because it's unknowable. I mean, I have no insight into what the Fed's going to do. But in general, I think that we've been more optimistic that they're going to achieve their idea of a soft landing. So we've leaned that the Fed is more dovish than people perceive.
You know, we actually have a viewer question right along these lines, which is that, you know, shelter costs, of course, a big part of why reported inflation remains as high as it is. And yet a lot of folks don't want to move because maybe high interest rates are holding them back, or maybe that's reducing the affordability. So in other words, would lower rates potentially help the one thing that's keeping inflation as high as it is?
Yeah, I've heard that argument. Yeah. I think it's actually really well reasoned, and it's counterintuitive because you'd think, oh, well, if you cut rates, shouldn't home prices shoot up? But you're right, if it's liquidity that's keeping homes from moving and, you know, a proper equilibrium of housing, it's absolutely dead on. Yeah. And there's also this excess premium right now on mortgage rates. The 10-year versus mortgage rates is almost 100 basis points wider than it should be. So as soon as Fed starts cutting, that collapses and it makes housing affordable.
Yeah, like 2.5 percentage points at this point, I guess, right? Yeah. We have to talk about, I guess, the innovation part of this market, which has been a huge source of energy for the upside in stocks. So we have NVIDIA reporting today, really at the center of this massive investment boom. It's also responsible for a big chunk of the upside for the S&P this year. So how do you handicap where we are in this trend and what AI's payoff is ultimately going to look like?
Yeah. You know, to us, when we did a study looking at what happened, what drives innovation cycles in America. And believe it or not, the 2 biggest innovation cycles in the U.S., which was 1948 to 57, which was a boom time, and 1991 to 99, were 2 periods when the world was short structurally of labor. So you had a prime age workforce growing slower than the total population, which means there was a lot of pressure on either wages or ways to innovate to produce more output. We've gone into a period of structural deficit of prime force labor, which is going to last till 2045, which means another tech cycle, I think, is underway. And for viewers, it's not just like NVIDIA makes chips and you got to buy it. It's just that there may be an 80 million prime age workforce shortage globally. That's $3 trillion of wages that won't be spent on labor. NVIDIA's revenues are $100 billion. So to us, this is really early stages for the amount of money that will be spent on generative AI.
So $3 trillion over, what, 20 years that would otherwise have been spent on labor?
And it's $3 trillion a year.
Oh, it's a year.
So it's actually close to 6% of GDP.
Got it. Okay. And so that, in theory, would be the source of the investment on an ongoing basis on productivity measures.
Yeah, like in simplistic terms, it's taking wage costs to silicon.
Yeah,
is really the theme.
So, I mean, in terms of a lot of his longer-term views there, 100%. I definitely agree with those, right? And in terms of what's going to be spent on AI and tech over the coming years, yes. But the one point I'll push back on Tom Lee with is I think he's a little too confident in where the economy might go over the next year or two. So I think he's right on with a lot of the longer-term visions and kind of thoughts and whatnot. But I think I just wouldn't be that confident in the next year or two. I think it's definitely, you know, up in the air on kind of what happens over the next year or two in regards to the economy, the market, those sorts of things, because we've been hit by inflation for really about 3 years now at this point in time. Consumers been hit, right? Fed lags really, I think, are catching up this year, and you know, Fed's going to likely keep rates still high for this entire year, even if they do cut once or twice. Probably small cuts, which means at the end of the day, rates are high all the way into 2025, right? Way higher than they've been really in the past 20 years. And so that leads us into this dynamic of like Fed lags catching up, inflation really hit the consumer hard the last 3 years. At some point that's going to break. At some point inflation's really going to break, but is that breaking then because the economy's really breaking hard at that particular time, which is something you have to factor in, right? So yeah, don't be too confident about the next year or two. Be very confident about the long-term future. That's where I would kind of chalk it up right there, okay? Let's get into NVIDIA, which, by the way, NVIDIA is having a great day. Let's go ahead and pull up the stock price here. Take a look at where NVIDIA is exactly trading at. So, NVIDIA, we can go to my current stocks here. Yeah, it's having a great day, $1,025 here today. I've seen it up. I think it was up even more at the peak. At the peak, it got all the way up to 1,062. So come down significantly. But I mean, at the end of the day, like even a 7-8% move up for NVIDIA is a great day, because a lot of people, you know, were winning these earnings thinking, oh, you know, it's gone up so much, maybe it's going to come down. They can't report even good enough numbers to have the stock go up. And, you know, no matter what, it's still going to end up being trading out at a very, very good day. Is it as good of a day as it was? No, but it's still a pretty dang good day overall out there for NVIDIA shares. In the stock split, I think excitement definitely could potentially fuel the rally maybe a little bit more, because I'm sure some folks are going to be excited about that.
First, we all know the story by now of what happened with the earnings. 24 price target increases at least today. Stacey Rascon with us yesterday ahead of the number, goes to 1,300. Nowhere near its peak is what he says. The list long and...
I told you guys, right? We're hitting 1,000, and then I wouldn't be surprised at all if it heads up to 1,200, 1,500, if the market stays in a good place. If the market falls apart, then NVIDIA won't head to that $1,500 number. If the market stays in a decent place, and especially if we get a little more bullish on the market in general, I think 1,500 is out there for NVIDIA. But yeah,
today
it's not nearly as much of a sure thing as I felt like 1,000 was when I was calling 1,000, you know, months ago. I felt like that was pretty much in the bag. I think 1,500 is a little more of a stretch, but I think we can get there if the market's decent.
Similar kind of commentary following these numbers. Obviously, this was not priced in.
So I rewatched the clip of you, me, Stacey, and Bryn. Were we bullish enough? Like we were all like, oh my God, it's NVIDIA. They keep doing this. Like somehow now they're guiding sales to 28 billion for the next quarter. That's up another 100% year over year. That should have been slowed down by now, and it's not. Analysts were looking for 26.6, so it's a meaningful guide. I mean, and apparently it was enough. The 10-for-1 split is the thing that I don't think a lot of people expected. I don't think that this has anything to do with Dow Jones inclusion. I saw some people saying that. Very, very unlikely that the committee is in a rush to add NVIDIA to the Dow 30. Not saying they shouldn't or they never will. I just think what that's about is options trading and stock-based compensation at the company. And there are a whole host of reasons for why they would want to do that. And it's not until June. So are there a lot of sellers between now and June ahead of the split? And you don't have to like send me emails. I understand how splits work. They don't really change the fundamental value, but people love them. You can deny it if you want to. I'm just giving you the behavioral side. So that was the...
So two things shocked, I think, people in regards to NVIDIA, and that's why that stock's moving up considerably today, even though it's actually a red day in the market. Like NVIDIA is one of the few stocks that's actually green out there, them an elf on the shelf, right? But I think two things shocked people in regards to the NVIDIA. The first one was somebody, it was a person or two actually on the chat yesterday on my Twitch live stream, that they were the only people I had heard. And I pay attention to all these Wall Streeters and listen to whatever they say about NVIDIA and read articles and everything. I had heard nobody bring this up. And a couple people in the chat were that sophisticated that they were on top of this before anybody was even talking about this. They were talking about watch for a stock split. They were right on. No one had been talking about that. I watch a million hours of CNBC, Bloomberg, listen to all these Wall Streeters read articles. No one was talking about stock split. And yet a couple people in the chat were talking about stock split. And then sure enough, the stock split came. That shocked people, right? The second thing was the guidance. Guidance was far exceeding where analysts were at, and even where some of the more bullish folks were kind of expecting as far as revenue guide. So between those two, the stock split plus a much better revenue guide than a lot of people expected, it even made bulls say, dang, man, not bullish enough. I need to get more shares. And that's why you see that stock having a great day, despite it being not a good day. You know, let me pull up a heat map, S&P 500 today. I bet you it's not good. Boom, boom, boom. There you go. Look at that. Look at that. Look at that heat map today. I mean, it's Red Dead Redemption out there in the S&P 500. It's awful, right? It's bloodbath, actually, out there. Man, I mean, it's red everywhere. And then we got one big dog, green today, right? NVIDIA. So that just shows, I mean, that also makes you think, what would NVIDIA have been up today if it was a good day in the market? What if today was an overall green day for the overall market? What is NVIDIA up in that situation? 12%, 15%? Are we talking about an $1,100 stock if this was an actual green day? And that's why I say, if the market's just decent, I can see NVIDIA going to 1,200 to 1,500. But if, you know, the market's red like this, it's gonna you know, hold back any potential gains for NVIDIA, just as this stock's being held back today. I'm telling you, NVIDIA would probably be pushing 1,100 right now if it wasn't for just this kind of Red Dead Redemption out there here today in the market in general.
Here and good enough for a pretty big day, up 100 points. Best performer in the S&P 500 right now.
The question is, I mean, at times you have used, you know, levitation in this stock to take some profits. Okay,
yeah, stupid.
So, well, that's my question. Like, what, you know, is it stupid?
But I mean, it's not stupid.
So, what are our viewers supposed to do today with the stock up like it is and hitting a new record? Are you supposed to take some profits?
Right.
Are you going to be disappointed that you did the next earnings report?
All right, so I don't think there's a right answer that fits everyone. I think a lot of this depends on, first of all, are you a professional or are you retail? If you're retail, you have no one to answer to. If you're a professional, you do. I think a lot of the buying that you're seeing in the stock, though, is because of exactly that. Really difficult to tell you.
Boom. That's an important point JB made right there. That's a very important point. Everybody watching this needs to understand what that man just said, right? When you're retail, you really have no one to answer to. If you do, it's a spouse, okay? That means you don't have to do anything. You don't, if a stock goes on a big run and it's a great company and they report great numbers, don't feel like you have to take a profit. If you really, really want to because you're like, it's overvalued, I can't see it going up much more, you know, it's a better place for my money, okay, fair play. But these Wall Streeters, they feel like they have to, oh, it went up a lot, so I have to take a profit because it went up a lot. And that's how they're justified. It went up a lot, it might pull back, the technical blah, blah, blah. As a retail investor, you don't have to do that, man. You don't have to mess around with all that crap. You own a great asset, hold that asset for the next 5, 10, 15, 20 years. And like I said, if it's way overvalued and you feel like there's a way better place to put your money, fair play. But don't stress about feeling like a stock's gone up a lot, so I have to take a profit. Like, you know, if you really need the money, okay, I understand. Like, oh, you know, the stock's gone up a lot, and I need money for a down payment on a house or something like that, right? Okay, I understand. Like, I get it. But outside of that, like, don't feel like you got to make moves in the market. These Wall Streeters always are feeling like they got to do this and do that, and ultimately, it's the reason. It's one of many reasons, actually, why their returns are not as good as they could be. Not even remotely close, right? And a lot of these Wall Streeters can't even keep up with the S&P 500. That's insane. Come on, man.
Investors that you're focused on innovation and growth stocks and be materially underweight NVIDIA. Like, what are you even saying you do? So that buying pressure is something that we've witnessed after every earnings report since the end of 22. The other thing that I would point out that's really important here, I've been in the stock a long time, and I have ridden it down 70%. 70% drawdowns in this name, 50% drawdowns. Not everyone can do that, especially if they're benchmarked, especially if they're answering, to LPs who are, expecting them to like hedge risk, etc. So it's a different answer for different people. My answer, I've already taken out my initial investment in this company multiple times over, so it almost doesn't matter. So I don't really feel any urgency that I have to like ring the register here. I'm fine. I'm staying with it. And I do think that this is a decade-long story unfolding ahead of us.
Weiss, you're in it. I mentioned Rascon over at Bernstein, nowhere near its peak. Ray J, momentum to sustain into the second half of 25. Piper on par with high expectations. Morgan Stanley, no signs of slowing down. TD Cowen, no further questions, Your Honor. UBS ticking all the boxes. Barclays, no slowdown in sight. Needham marching towards $3 trillion in market cap. Ives, guidance should be hung in the Louvre. So, this.
Here's another thing. Here's another factor, right? Beautiful bird just flew by me. Here's another factor. Like, if you're wondering why is the stock price, having such a great day, despite it being a Red Dead Redemption day out there in the market, right? And despite the stock running up into earnings, that's another thing to factor in. NVIDIA ran into earnings. It wasn't like that stock had been underperforming, doing really bad, and then all of a sudden, they had the earnings and then it goes up. No, that stock had been running into earnings, right? But I think another factor why that stock's doing really good on even a Red Dead Redemption day like this today is the shorts. Listen, anybody that's been short NVIDIA stock, which, by the way, it's just been a really bad idea, these folks, you don't have anything. And I explained this in the main channel video last night. Jensen destroyed every bear thesis out there. He basically got asked on the conference call about every single bear thesis. Everything. And he destroyed them all. And so you as a short seller on a day like today, you got to just say, dude, like, I've been losing my face on this one. It's not worth it. It's not worth it. Jensen just destroyed every bear thesis out there. Like, what? Like, you're just going to keep betting against it again and again and again to lose again and again and again. Like, at some point, you got to say enough is enough, and you got to cover your short.
Universal in the praise. What do you make of what we're supposed to do now?
Yeah, so normally when you see that kind of euphoria, it reminds you, if you're a student of history, it reminds you of the tulip bulb, euphoria that we saw, and guess what happened to that? But I don't think that's the case here. If you take a look, despite the move, now, of course, there's some momentum in it. There's a lot of momentum in it, as there is in the market overall. But if you take a look, actually, in the next 12 months' earnings, relative to the universe, which they're in, it's actually near the lows over an extended period of time. Goldman put that chart up in their report post-earnings. So that should give you some comfort.
You mean the valuation?
Yeah, I mean, yes, on the valuation based upon next 12 months earnings, yes. So you're not talking about a very expensive stock. AMD is a more expensive stock than this, substantially more. So the fundamentals are there. What separates this is...
Who's been pointing all this stuff out? Who takes you through 1000X and shows you guys all this stuff? Like literally, I honestly think like Wall Street, maybe they just watch my channel and they learn from the stuff and then they update it a few weeks after they watch my videos or something like that. Like, this is all, like, everything he's talking about. Oh, Goldman did these charts. Like, it's the stuff I show you guys all the time. Like, come on, man.
Is that the CEO, Jensen Huang, keeps going to where the cup is going to be rather than where it is. So others catching up. That's true of Apple. That's true of AMD. That's true of so many others. So I think keep going. It's not a large position for me. I did add a little bit during the week, but still not large. So I continue to play in the others, the mega cap. And I think that's where you've got to be, particularly with the debate that should be raging, that's being ignored right now, is that will the economy continue to withstand this tight monetary cycle that's going on for an extended period of time? So it completely, made you ignore the Fed minutes yesterday, which took the market down So look, so I still like it. I'm still there. I still think it's reasonably valued. I'm uncomfortable with the uniform praise as I am anytime you hear that.
I mean,
but hey, I'd rather have that than have to explain away an earnings quarter.
You know, if you're one of the best, you're one of the best. I mean, you know, can you praise Brady Mahomes enough? I mean, they live up to the hype.
There are other
what more do you want?
I feel more comfortable in, which we'll get to. But yeah.
So, Liz, going in, we asked the question: the importance to the market of NVIDIA, the importance of the tech trade, kind of a referendum maybe on both, since tech has led us back from the April bottom up 14.5%. It's been the best, you know, by far. Green light now for this tech trade?
Certainly in the near term, a green light. I think a lot of the concern was over whether or not revenues would hit the marks and whether or not revenue guidance would be as attractive as people wanted it to be. And we know that the revenue of NVIDIA is dependent on a lot of the other tech companies' ability to spend. And that's been clear throughout the year so far when we've heard from some of the other big tech names about what they're planning to spend on AI going through the rest of the year. You get that benefit in the semiconductor space. So far, so good. I do think that as the year moves on, investors have to be careful about risk management. This is back to what we were talking about with Josh earlier in the show. If you've been in this name a long time, if you've been in a lot of these names a long time, you're probably quite overweight at this point, or at least it's run up. Making sure that you're managing. This is back to what we were talking about with Josh earlier in the show. If you've been in this name a long time, if you've been in a lot of these names a long time, you're probably quite overweight at this point, or at least it's run up. Making sure that you're managing your risk and managing your exposure. The good thing right now is that you've got yields up today. I mean, the 10-year's up almost 10 basis points. You've seen a pop in 2s and 10s today.
Well, the data today was pretty good.
The data was good. The PMI data was good. So you're seeing somewhat of a recovery and little green shoots in parts of the manufacturing space. But these stocks are not down. They're not being pressured by yield. So I don't think that's what they're trading on, even though that's what the conversation will return to now that this earnings report is behind us.
Okay, so because of NVIDIA's numbers that they just reported and their guidance, should you feel more bullish on other big tech, whether that be an Apple, Microsoft, Google, Meta, Amazon, these sorts of companies, right? Should you feel more bullish based upon those latest NVIDIA numbers? The answer is no. There was nothing in that NVIDIA report that, if you pay attention to all the other companies, should have surprised you. These companies have already set their budgets for what they're going to spend on CapEx this year, and they're also talking about upping those budgets next year, okay? So you can't feel better about other tech companies based upon those NVIDIA results. This is, if you pay attention to what these other companies say, it's just what they've already announced, right? So now, understanding these companies already have budgeted in these NVIDIA chips for this year, right? And some of them are already budgeting in for 2025, at least to a certain extent. Things could change, right? Let's say the economy, let's say, goes bad over the next year. Let's just say month in and month out for the next year, the economy gets far worse, right? Well, then there would be a situation where some of these big tech companies could pull back spend in, let's call it, the back half of 2025, which would then start to affect NVIDIA's numbers, where on a sequential basis, you could actually see them flatlining, or you could actually see their revenues go down on a sequential basis. But you're still kind of waiting for that whole game to play out. And the only way that's really going to happen is the economy's really got to get worse and worse for the next, year. Literally, for, the next year, every single month, the data's got to get worse and worse. Confidence got to get worse. The employment market's got to get worse. Everything's got to get worse for that to happen, where these big tech companies actually say, a Meta's revenues would have to all of a sudden, let's say, go from major growth this year to flatlining next year, right? Because the economy got tougher or something like that. Businesses couldn't spend as much. So suddenly, all of a sudden they're in a flat revenue situation. All of a sudden, Amazon, let's say their e-commerce business flatlined or something in a really bad economy. And the next thing you know, they've got to... They kind of look at their budgets and we're not going to spend quite as much as we thought we were going to spend, because we were growing revenues at double-digit percentage, and now we're flatlined, right? Which would make sense. But you're still kind of waiting probably to the back half of 2025 for something like that to happen, right? So the moral of the story is don't feel any more bullish or less bullish based upon NVIDIA's results there on other big tech companies. You should have already known if you pay attention to what's going on.
Been pounding the table on it. You've been right. $1,000 a share, guiding $1 billion over forecast. I'm trying to find something to ask you where there might be a hole in the story, but I just don't know.
The party's just getting started. I mean, I believe this is really this AI revolution that's playing out. And it's not just for the godfather of AI, Jensen, NVIDIA. You look across tech, we're going to be talking about $3-4 trillion types of valuations in tech. There is no slowing down. Brian, I think even the bulls, this is a drop the mic quarter in terms of this. And look, you have bears out there, of course, like Ross Gerber and others on valuation. But I think this is just starting. It's a 1995 moment, not a 1990.
I guess if I had to poke a hole in the story, I would say, because I'm the energy guy, right? Are we going to be able to make enough power to power all these things? Do they have the manufacturing capability to make all these things? Or do they start to get such a backlog, Dan, that customers do start to look elsewhere? Because, like, I don't want to wait 5 years, right? And I'm not Meta, I'm not Google, so I'm not at the front of the line. Is that a concern at all?
That's not a concern for I'd say another 2, 3, 4 years. So for now, the runway's there. And I can just tell you from our Asia checks even this week, it has dropped the mic in terms of what we're seeing from a demand perspective. And that's bullish for the rest of tech. And that's why tomorrow, if you're a bear, you go deep into your hibernation mode, into those caves, because that and valuation, that's not going to save you.
Okay, well, you guys all stick around. We're going to add a voice on one name that you just mentioned. Okay, you had a little bit of a mini Twitter spat with one of our guests last night after they said this.
I think NVIDIA is fully valued at the current price. I think their numbers will meet or beat expectations, but it's going to be really hard for the stock to move higher on the short term because a lot of this is priced in.
And Gerber Kawasaki President and CEO Ross Gerber joins us now. And Ross, I'll say this, okay? Because I think in some ways you kind of got it right. Dan will disagree. The most unbelievable quarter in the history of quarters, and the stock is not moving that much.
Well, no. First of all, I want to make it perfectly clear. I am not a bear, okay? I am super bullish on NVIDIA. We own 125,000 shares of NVIDIA. It's the top holding of my ETF GK. It's the top holding at my firm. So by all means, I couldn't be happier with NVIDIA's performance, but I'm also a guy who runs a business and owns a business, and paying 25, 30 times EBITDA for a business is a really, really great valuation. I thought 1,000 would be, sort of where I wanted it to be, and now we're there. And that's what I say. I think it's a lot of this is valued in the stock. Now, I hope it goes higher, and I hope they keep beating and beating. But I've been in NVIDIA for 10 years, and I can tell you, these are cycles, and this cycle will have a point where it inflects at some point, and we just don't know when.
I would say, look.
Yes, and that's why you got to pay attention to the sequential numbers, the quarter-over-quarter number, growth rate substantially, okay? When that goes to like under 5%, then you got to start worrying about this NVIDIA party being over when it goes like 5% or under.
Reality is Ross, like many others, went into this quarter driving 45 miles an hour in the right lane in their minivan. And they underestimated.
It's a Rivian now.
Dan, I got 10% of my money in NVIDIA. What are you talking about? I'm driving a Cybertruck, not a minivan.
But they underestimated, and I think as the Godfather we heard spoke, the demand that we're seeing, it's just starting. Because this is really what I view as the first, second inning of what's going to continue to play out, being led, of course, by Jensen as well as Microsoft and what we've seen with Intel. That's why, in my opinion, when you look at NVIDIA today, you get that popcorn ready. It's just starting in terms of this run.
I really hope you're right. I really hope you're right. I think there's a long runway for AI. I agree 100%. And that's why I fundamentally don't disagree with what you're saying. It's just, I actually manage the real dollars. You're an analyst. It's a little bit different because I have to explain to my clients, why they have 20% of their portfolio in one stock. And so we have to be prudent investors, and NVIDIA trading at 30, 40 times forward earnings is this historical multiple. Now, maybe it deserves 50 times forward earnings. I don't know. The market will determine that. But we're very bullish on NVIDIA, and we're very happy with its performance. And we're not selling any more than keeping our allocation at around 9 to 10%, which is where we're at.
I get the concern, especially going into this earnings, but NVIDIA is considered a pure AI play and pretty much the only one in the market thus far. far. But I think what Jensen Huang really said on the call and focused on was that demand is going to be sustained for the next several quarters, even with their next iteration, the Blackwell chip.
100%. Yeah, and if you want more information, details, watch my video on the main channel I put out last night in regards to NVIDIA. It's like a 30-minute video, went all into NVIDIA's numbers, what was said on the conference call, the bear case, destroying the bear case, all those sorts of things. So check out the main channel for that. Pin comment down there, folks. 7 steps to 7 figures plus in stocks. About a 32-minute workshop should help you out immensely, giving you growth hacks in that one. That will be pinned comment down there. Much love and have a great day.